G'day everybody, Johnny Seville here from Acorn Wealth Corp, and here is the most ever important executive summary for this week, being the open range after options expiration. So we know how important options expiration day is. It sets the tone for where we'll go for the next week until the first trading day of the month, being next Monday. Now, the high of the S&P on Friday was 2110.61. The high of today was 2110.05. So we didn't break a new high, we didn't break a new low, and we had a very inconfident close today on weakening volume. So be warned, this week could be a divergence period where the smart money starts to get out of positions and downturns start to happen. Now, we've been commenting on a lot of longs, which is almost predominantly the entire way we've been trading for the last month. The first of which is worth a mention, was RIGL. And this thing blew up. We picked this as a long at, I think it was $2.50 a week or so ago. And this opened up at $3.65. So anyone trading this got an early Christmas present, and this is exactly what the type of things our strategy finds, is these kind of secret ingredients going on as these builds happen. So went well beyond where we thought it would, but $3.65 from a $2.50 jump, of course, I'm sure is good in anyone's books. So that's that happened today. Now, another one that's been performing, of course, very well. One of my favourites that I own a position in is ATRA. This has continued to storm up another 7.27% today and breaking the upper trend line. So onwards and upwards, go hard. Now, let's also have a look at, I believe it was MEIP. I always forget the symbols, because I always forget what they do. But MEIP also had a very significant break, up 7.5% yesterday and up 4.24% today, hitting both of our targets. So this has been a beauty, up from $5. Oh, excuse me, actually I think it was up from around $4.22 where we originally found it. So this has done extremely well. And although there are a lot of pharmaceuticals, the pharmaceuticals have been hot in the market, so follow where the money's going. Now, we're still looking at a lot of longs. So my focus today was on looking for potentials to the downside. You always want to be just, preparing for what could possibly happen. So if we are building towards a top, which we should know by the end of the week, Fran is one that came across my screen. Now, Fran, you can see, has had a nice little rally, but it's been declining and just started to break down over the last couple of days. Let me zoom in for you. It just broke support at $15. The main problem I see here is this cluster of moving averages around 14.29. So that's what it has to break, and therefore, in terms of looking at a potential trade, I would still hope that it would break it. But if I was to put a target on, I'd be looking at the bottom end of this support. Let's use a Fibonacci to try and confirm the levels of movement. Okay, so if we do that, you'll see that we end up with a 38.2 Fibonacci, right about the same level. So the 61.8 comes in here at 1368. So that's what I'd be looking at. It's a very short-term trade, but it's got a little bit of a nasty kind of support level here that makes me a little bit cautious. But there's one for your watch list. One that I looked at which was rather interesting was AMRI. Now, AMRI has a fair bit of institutional selling and insider selling, which for a research company is generally a little peculiar, because you'd assume that if they found gold, then they'd be buying more of it. But regardless of what the fundamentals are underlying this company, it has broken down. So despite some of the bullish activity in the market, this stock has failed to close in the top half of its range almost since back in the middle of January. And over the last few days, it's actually broken down on its trend line and looks like it could be set for a lower drop. So in terms of this stock, I'm looking for an entry really basically anywhere around 16 up to 16.50, and I'd be looking at a target down here at the level right about there. We can confirm with Fibonacci's. Of course, we always want to be a little bit conservative because I'm sure everyone else is looking at the same Fibonacci's. So let's do that. Let's bring this back down a bit. So essentially, for a 61.8 fib, we're looking at a target one of 15.19, so look about 15.24. However, this does have the potential, I think, of dropping down to where that 77% is, which is where it originally drew on the trend line, which is here. And that's at 14.69, so I'd be looking at 14.77. So decent potential on the downside there with our AMRI. And the last one, TRUE, True. This had some significant down days. You can see that the size of the candles has been decreasing, so that does warn of a possible reversal. But if we look at the way that's been shaping up, we've got a possible flag formation here with a declining neckline. Not perfect, so we can't go off that purely. So what I would be looking at here is a drop from 17.17 with a target 2 of 15.26. If it does become a head and shoulders, you can see that's where the resistance comes into play. But for a short-term trade, I'd be looking for a drop, I should say, down to this level here, which is 16.47. So that would be probably more something that day traders would be attracted to. But given how heavily long we've been over the last few weeks, I feel it's important to start looking for stocks that may offer some shorting opportunities. So there you have it. Hope everyone was making a lot of money this week, and we'll see you all in the next executive summary. Have a great night, great morning, and happy trading.